Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Let's start the show, and today I'll be giving you some more hints for the company which will be addressed at KYC. Some hints. Of course, the first hint for the company is it's an auto ancillary company. Wide definition, let's narrow it down a bit. Let's look at the second hint, what it is. It is a strategic JV with a Japanese company. This is a big hint I have given you. And you must be wondering, and it's quite easy to guess, but important thing is it's in the wiring harness segment. Now this becomes very easy to guess, it seems. But apart from this also, the company has been in news because of its earnings also. That's what we will be tracking. And the company in focus is going to be Motherson Sumi Wiring. That's the company I'm talking about. This is the company which will be in focus. And remember, we will be asking the management also about the key details, the growth strategies, and also importantly, how the industry is faring when you compare the Indian-European trade deal as well. But why the company? Why are we getting this company? First one is the Q4 sales outlook. After the GST rate cuts, will we see these numbers actually going up? Because remember the Q3 numbers which we spoke about, they have been really good. So will this momentum continue? The second one is the benefits from the Indian-European Union trade deal. The company is already having a strong strategic JV partner. Spoke about it. It is Sumitomo. Now remember, these are companies which are having good supply chain systems in Europe also, and there might be some more benefits coming in. Another is the cost impact on the new plants. The company is undergoing plant expansions also. That means on the balance sheet, we might see some kind of a margin pressure as well. Return on ratios, the company is having a high return on ratios. So that means in that way, these numbers might come on the lower side. But why the volumes have dipped in the Pune plant, that's also a concern. We will be asking the management. And lastly, the progress on the completion of the Navagam plant. Will it get completed in the fourth quarter, or will there be a delay? These are the key queries, which have come in from a lot of investors who keep tracking us KYC in the social media and TV, and that's what the request has come. On the show, we are having two people from the management. There is Gulshan Pahuja, he is the CFO of the company. He will be there. And apart from this, Anurag Gahlot, he is the COO. They will be joining us. So Anurag would be there as well. But let's move on and give you some more details about the company. I've given you largely the entire picture about it. It's a JV. There is Sumitomo involved in it as well. The numbers have also come out, but largely has the company given that benefit to the investors, and that's why we get these companies in KYC to give you much more details about what the company is actually all about. Now they are having a full system wiring solutions, and they provide that for the Indian OEMs. India OEMs is original equipment manufacturers, and they have established following the demerger of Samil's India wiring harness business. So there was a demerger earlier from the group itself, and that is where the value creation definitely comes in. But has that actually impacted the stock? That's a query to be asked, and maybe on the lower side is something what the investors have told me. Apart from this, the company operates as a JV between Samil and Sumitomo Wiring. This comes after the demerger. There is a JV has been made, and these are the key details about it. There, one of the core products is the wiring harness systems. There's a lot of bunch of wires which are there. So they actually accumulate them and then they install them in their important, you could say, the engine systems. But how the revenue mix looks like, definitely the passenger vehicle, that takes around 60% of it, and that's what I was talking about. That's the majority of it. But it's nevertheless, it's not just passenger vehicles. There are other smaller segments also which would be in focus. The second biggest is the two-wheeler segment, and apart from that, they are also in commercial vehicle, agri and other segment as well. A very important part of the auto component, and if the auto cycle goes up, there's an indirect beneficiary in this segment as well, and that's what Motherson Sumi wiring is all about. So this is what the entire details which I have given when it comes to the wiring setup, about the company looks. But our setup is also very much important. The KYC setup, 8 of parameters are there where we'll judge the company. The first one is the income statement. That's roughly, you could say, the last 3 to 4 years CAGR numbers in the balance sheet PL. That's what we'll judge the company. Balance sheet, we'll check whether the debt equity ratio is fine. Is the cash balance good enough? Cash flow, most important thing, and it's just like a heartbeat of a company. That's what we'll be tracking. Return ratios, ROE and ROA, is it on the higher side? Shareholding, any institutional movement in the last 3 years or so? Street cred, has the stock actually made returns for the investors? Valuations, we'll compare them with the peers, and the outlook for the industry and the company. I have combined them both. So these are the 8 parameters where I will judge the company. The first one is the income statement, and remember the Q3 numbers are also involved in this, and largely the incomes has been stable for a company size like that. The revenue 3-year CAGR, that's what you're seeing here, that's around 18% up, and the top all the EBITDA numbers and the PAT numbers, that's decent, 11 to 14%. But yes, investors, they always ask, "Ye dil mange more." Is it there in Q3 performance? Well, year-on-year basis, whenever we judge a company, that's what you do for an auto ancillary. So sequential numbers are not that important, but the year-on-year numbers are strong. Of course, some kind of a dip is definitely there in the margins, but it's not that relevant. 26% growth coming in top line, and that is something which is coming good. But the margin trajectory over here, it has been changing all around. But in FY24, it was 12.2, 10.7, now 9.1. Now the question arises is the product mix changing, or is there any other reason coming in that we are seeing such a low margin profile? That's where my concern comes. But top line has been good, and that has been stable, and that's what works in the favor. Let's just pull up the Q3 numbers to give you that entire picture that how changes have happened, but year-on-year basis it's decent. So a neutral rating comes in when it comes to the income statement. Now let's move to balance sheet. That's the second one, and largely remember the company is demerged. It's already a lot of DD has been done. It's coming from a very strong parentage. A JV is also from Japanese companies. So a lot of big concerns you won't find in a balance sheet like this. Roughly it is stable, and if you look at the numbers, the borrowings is literally negligible. A working capital kind of a numbers is there. And one thing is good is the cash bank balance, that's healthy also, 238 crore rupees. Nothing great about it, nothing bad also about it. So that is why I have given a neutral rating when it comes to the balance sheet. But income statement, balance sheet, we spoke about. Both of them have got a neutral rating, but you should be looking out for cash flow. If you are an investor or a student of the markets, that's very much important in any business model. But that's where my concern comes. Look at that. Earlier, this number was a strong one, cash flow to PAT conversion, but that itself has come down. It's around 60-odd%. And then cash flows over here, it's down on almost 153-odd crore rupees. We expect to see some good cash flows coming back in the company, and this is the numbers I've taken just till FY25. Of course, the 9-month FY26 numbers will be also much important, but company is coming from restructuring and now they are expanding also. So there are flows coming in. So I've given you the reason also why it's down. But nevertheless, cash flow is something you should be checking, and I have given this a thumbs down when it comes to this segment. But return ratios, let's see what happens here. And largely we see the return ratios are very strong. The ROC number, the return on capital equity, is talking about all of them. You see each year that is up 40%, and that is showing a good strength as well. Even the 9-month numbers also we calculated that was above that 40% mark. The ROC numbers are very strong. So because of that, I will be giving a very strong thumbs up for an auto ancillary company like Motherson Sumi Wiring. And the same story goes for return on net worth. All of them are comfortably up. A very high return ratio is something which the company is commanding. But let's come back again and let's talk about the shareholding pattern. It's very much important. Let's see how the institutions work, DIs, FIs. Let's pull up the last 2.5 years. Remember how the shareholding pattern has moved. The shareholding segment, the promoters is largely stable, nothing to look at. But over here also FIs, DIs, nothing much has changed. It's looking almost stable. And if you get into the granular details, maybe 1% hike coming in for the DIs as well. But largely a stable balance sheet, a stable shareholding pattern, and that is why I give this a neutral rating when it comes to the shareholding pattern. But let's move on to a very important segment, that's the street cred. When I talk about the street cred, it is nothing but the shareholding returns which you have got, be it a 1-month shareholder, 1 year, or even since its listing, or in this case the demerger. Nothing has happened major If you are a shareholder, the stock has tested your patience and hasn't given much return at all. 1 year is just 12%. That might be the only silver lining, and that's where the concern comes. Let's pull out since its listing what has happened, and remember this listing data is nothing but the demerger part, and nothing much has happened. It's just 43% and it's more than 3%. You could say almost 4 years kind of a history is there, and 4 years around this number is dismal. So because of that, I have given this a strong thumbs down when it comes to the street cred. Also, let's talk about the valuations. Auto ancillaries generally command a higher premium when you judge them, but they have corrected the way the cycles work. But there is a kind of, auto sector doing well, where auto ancillary comes with a lag. So auto stocks have gone up, their valuations have gone up, auto ancillaries do a catch up, but definitely there are supply chain issues at times as well. But the 12-month forward P ratio, Motherson Sumi is 33 times. You compare that with Uno Minda Bosch, that's on the higher side. Look at that, 40 plus P coming in. But there are two more auto ancillaries in my analysis I would like to point out. If you could just show the other two as well, and then compare that with Motherson Sumi. Only Endurance Tech is cheaper when I compare that with Motherson Sumi. Sona BLW highest, almost you could say 38 times. Now all of them are auto ancillaries, and auto ancillaries are very different products which come in the car which you drive. But net the valuations are cheaper, and because of the stock correction which we saw, and stock not being a big multi-bagger even after the demerger, value not chasing this stock, and that is where this valuations become attractive. And when valuations become attractive, our KYC ratings also become strong. So we have given this a strong thumbs up. Let's talk about the outlook. Outlook is very much important from the industry perspective and the company perspective as well. Navagam plant, that's expected to be completed by the fourth quarter of FY26. We will be asking the management, is the timeline right or not? Higher copper prices, that impact needs to be seen. Are they hedging it right, or is that going to hit? Because wiring is there, and when a wire comes in, 30 to 35% of the cost of the wire comes from copper segment. The more opportunities after the Indian Union trade deal. Will the global trade setup change? China is doing a lot of work. Now, will that benefit India after this India-EU trade deal? That's what we'll be watching out for. The Q4 momentum is strong, as we saw in Q3, and the GST cut rate boost revenue is continuing in the industry. And there is a second order effect when it comes to the auto ancillary space. And of course, the capex plans for 2026, 3 or 4 plants are already in the greenfield stage. So we'll be looking at that amount which is there. That's where the focus would be there. So let's give in the numbers. Outlook, of course, is a neutral rating because a lot of developments are happening. And income statement, balance sheet were decent enough, you could say. Cash flow is a big concern for me, but return ratios of such a high product line which they have, a high value product line, and that is why it's doing well. But let's see what the street cred is all about. Street cred, nothing much returns if you're already holding this position in this stock. If you're an investor, shareholding has been neutral. There is a decent participation in the FISDIs. Valuations are very attractive because nothing has much happened. The earnings have moved up, but the stock price hasn't, and that's why the reason is here. Outlook, it's decent. It's work in progress. Let the greenfield initiative start coming in after maybe 1 year, 2 year. The benefits start coming in the balance sheet PL. But yes, it has tested the investors' patience. The total KYC rating for Motherson Sumi wiring is 4 out of 8. That's what we would be giving. But just to get more clarity in our analysis, we will be looking at the overall management. We are now joined in by Gulshan Pahuja, the CFO, and Anurag Gahlot, the CEO of Motherson Sumi as well. Anurag, my first question for you is that the broader growth has been seen in the auto space led by the GST cuts. They have boosted the revenues for you. But what's like the momentum for the fourth quarter? Will it continue going ahead?
Yeah, as you've seen the Q3 results, it has 25% year-on-year growth has seen, and the way Q4 volumes are going up, I think we will be it will be the good quarter for us as well. I think MSWIL has done highest ever revenue, quarterly revenue in Q3, and I think if everything goes well, I think we'll beat Q3 also in Q4.
And Mr. Gulshan, hi, Sharad here. The cost impact on the new plants, what kind of margins or profits can you see an impact on it, and by when can this stabilize?
See, if you see quarter on quarter in terms of the greenfield plant, there's an improved performance. The startup cost, or in fact the losses, I would say, it has gone down in the current quarter. And as soon as the plants gets operationalized, like Kharkhoda is getting ramped up by end of this quarter, and one of the other plant is also going as per the plan, whether the SOP will come in this quarter. So the things are very good in place in the coming quarters. And if it is stabilized, I think in terms of the margin, it will go better at overall basis. So even if you have to see the performance of the existing units, our profitability remains stable the way we were earlier, if we exclude the impact of the higher copper prices.
And Gulshan, the copper prices have been impacting the industry. What kind of hedging practices are there? Because generally there is a significant amount of costing comes in a copper prices in the wiring system we talk about. So what are the practices here?
Yeah, so currently, we have the understanding with our customer that whatever the prices have gone up, they got it compensated from our customer side. So it is back-to-back arrangements. One is copper and the second is the currency fluctuations. So I'll pick up the copper. But there always the lag impact which is there in our profitability, because it will take some time to get it recovered from the customers, because our prices have been fixed with respect to the previous quarter, and we procure copper at the current prices. So it always takes some time, like a quarterly impact, or for some customer it is a 6 months impact. So that impact is temporary sitting in our profit and loss, which is impacting the profitability, which you have seen. And it is a back-to-back arrangement only where we get it compensated from the customers. So impact is there, but in the short term is there. But yeah, in the long term, it gets neutralizes by compensating from the customer side.
All right, so 3 to 6 months is the lag. Our viewers, you should know that, because a lot of industries, focus on the copper space, and the copper prices are on the high path. So that's where the concern comes. But coming back, Anurag, let's talk about the automotive landscape. What happens after the India-European trade deal? What changes happen?
I think we are already supplying to all the OEMs in the country, and we have relationship with these customers more than 4 decades. Any new customer coming to India also, we are very much ready. We are a engine agnostic, supplier of wire harnesses. We have a strong parentage. One side is Samil, so second side is Sumitomo. So we are a very future-ready organization to take care any of the new customer, any new requirements, or any new technological upgrade which is going to happen in wiring harness. We are very much there. So if this trade deal is going to bring something new opportunities for us, we are definitely ready into the domestic wiring harness business in India.
Right, and just to give the perspective for our viewers, we could say that roughly 40% plus market share is coming in this space, which is the wire harness we're talking about. But Anurag, the plant, the Navagam plant, is it on track for fourth quarter FY26?
Yes, it is. As we are speaking, it is right now on to the ramp-up stage. This is a powertrain for EV and ICE both. And another model is for EV, for which volumes are ramp up right now. So I think this is very much as per the plan.
Interesting. Gulshan, the Pune plant, that has seen lower volumes. That's what anticipated, what the street was there. But what are the key reasons for it? Why the volumes are on the lower side?
See, there is no specific reason. We are customer-driven auto ancillary, so these plants are dedicated. So when this plant was set up, it was supposed to cater to a certain volumes where with the customers have provided us to at the beginning level. So if I just break into two parts, one, the one has already been, I mean, it is very clear from the customer that the volumes are a bit lower side, and it will take some time to get the volumes which have been forecasted earlier, right? So it will take some time. And with respect to the other plant in Pune, I think it is a bit delayed, but the volumes will come up. So that's the confirmation we have from the customer. So I think it is a just wait and watch for like 1 or 2 more quarters when the volumes will be back in from the customer side and will be fully operationalized. Yeah.
Well, that's the management speaking about Pune, and it's going to take 1 to 2 quarters, and then the customer has said that the overall production will go up as well because they're going to give the order to the company. So that's pretty much interesting. But yes, 1 to 2 quarter of overhang is there. But Anurag, capex plans for 2026. There are 3-4 greenfield projects lined up. We spoke about Navagam also, but the capex amount for 2026, 2027. What is it looking like?
Yes, as of now, customers are giving their requirements. We are just populating all these requirements, looking after for the next year, which is 26, 27. And you will hear us very soon about in case there is some new plant has to come up. But yes, we are working on these capexes, and they will be into the same value around what it is in this year.
All right. Thank you very much, Anurag and Gulshan, for taking out your time and giving the views and addressing a lot of concerns which are raised for our viewers, also for this company. Thank you very much, gentlemen. But let's revise, what management has spoken about. Of course, 1 to 2 quarters more of work will be coming for the Pune plant. And interestingly, that pressure which is there on the higher copper prices will continue as well. So it's a very mixed commentary, to put it very easy. Perspective in our analysis also that has come in the KYC ratings. Let's see, income statement, balance sheet. It's been neutral here, and I've taken Q3 numbers as well. Cash flows, that's where the concern comes whenever these issues happen. So we have given a thumbs down for it. Return ratios are very healthy for a business model like that. 40% plus of ROC numbers are there. Return on net worth also really doing well. So the quality is strong. Parentage can't be questioned. Really good parentage is there. Motherson Group, Sumitomo is also there in this, and they are a market leader in what they are doing. It's just a matter of the cycle coming up so that the auto ancillary comes up. Street trade, nothing much has come into the returns, and that is where the valuations become very attractive. Something like an early 30s or a late 20s kind of a valuation coming in this stock, and that is where long-term investors might have a jibe at this stock. But outlook, net, it's neutral. It's a work in progress. And of course, there's a lot of industry involvement with the raw material and supply chain management changes, services as well. Indian-European trade deal is something which all the auto ancillaries look. So you should be studying this entire ecosystem. And yes, India's auto ancillary story is there, and it's really doing wonderful. We saw that in the budget as well. The KYC rating for this company is even Stevens from our side, 4 out of 8. So this is the entire picture for Motherson Sumi wiring, and that's all, folks. Thanks for tuning in to KYC only on NDTV Profit. And any kind of queries you have on any companies, you can mark us in the social media, ndtvprofit.com, and you can ask for the companies which should come here in this show. Thank you very much.